You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again. It is time for TWIFO, This Week in Futures Options, the program where we break down everything going on the futures options side of the fence. What's lighting it up this week in ags and FX and metals and equities and energy? You never know. That's why you have to tune in each week to find out. My name, of course, Mark Longo from the THE optionsinsider.com, as well as from the network upon which all of you folks are mainlining these days. Hope you're having a good trading week, a truncated holiday week. So bear that in mind as we're breaking down some of the numbers today. Probably going to be a little bit lighter than a standard trading week, but we never know. That's why we have to sink our teeth in. Of course, if you want to sink your teeth into even more content than what's available on the network, only one place to go. Theoptionsinsider.com/pro is the place to go to learn more, including options oddities after vol views every week. And then, of course, great pro Q&As. Had another great one this week, going deep into the world of volatility, tackling all your questions there. Pro giveaways, early access to content, a whole bunch of fun stuff. Theoptionsinsider.com/pro is the place to go to learn more. As we learn who's joining us this week in the CME Hot Seat, I'm pleased to welcome back our old friend, Miss Catherine Yoshimoto, the Director of Product Management over there at FTSE Russell. Catherine, welcome back to This Week in Futures Options.
It's a pleasure to be back. Thanks for having me back.
Well, I know one thing when you're joining us, Catherine. That must mean it's recon time. So let's dispense with the usual format and dive right into a little bit of equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everyone, welcome to the topsy-turvy world of equities. Even more topsy-turvy these days because it is, of course, listeners, June. That means it is time for the annual Russell Recon event, a big shakeup in the stock world where we learn what's changed since this time a year ago. A lot of interesting data points, a lot of interesting nuggets to sink our teeth into. Catherine, let's start there. We obviously have a lot of new listeners, even since the last time you and I chatted, probably a year ago, around Recon time. So let's start there. Give our listeners a bit of an overview. What the heck are we talking about? What is Recon, and how does this process all unfold?
Great. Yes, Russell Reconstitution is a vital part of maintaining the representativeness and accuracy of the Russell Indexes. As many of you know, Russell Indexes were launched 40 years ago, and it's now become the institutional benchmark of choice, meaning, clients are, really use it to differentiate the large cap Russell 1000, small cap Russell 2000 growth and value spaces. So it's really important that we conduct this annual reconstitution in order to, make sure we're capturing new and growing securities or reassigning growth and value companies where they belong. Now, in terms of the changes since the last year, I would say it's kind of like more of what we saw last year, but magnified. The Magnificent Seven, have continued to grow, and largely the markets have grown overall since last year's reconstitution, with the breakpoint between the Russell 1000 and Russell 2000 going up from 4.2 billion to 4.6 billion as of this year's rank date. But we did see the Magnificent Seven growing a lot more than the other companies in the index. So just kind of continuation of the growth in tech and momentum theme that's been driving the U.S. equity markets over the past year.
Crazy. 4.2 billion in market cap. You're still a small cap these days, Catherine. That just shows you how much the markets have shifted, even since the last time we did this dance about a year ago. But, one of the fascinating things I find, Catherine, whenever we do this, is obviously it comes away with a lot of interesting shifts. You mentioned some of the big trends we're seeing right now, which is a continuation of what we've seen in the past. A little bit of a battle there between Apple and Microsoft. Who's going to take the top spot? I'll let you reveal who has the top spot right now, even though today's trading activity may indicate something different. But remember, this is all done by a certain date, listeners, the rank date. Maybe let's break that down again, Catherine, really quickly, the process, because some people might be listening to this, seeing, let's say, the market action today and say, why isn't NVIDIA at the top of the list? So let's break down the order of this process here for them.
Yeah, that is an excellent point, Mark. So the reconstitution process, obviously, we need to give the market an idea of what the rules are, right? That's the transparency that the Russell indexes were based on in their design. So this year rank date was April 30th. So all of the information that is used to, review the eligibility of the companies in the index is based on the available data available as of the rank date, April 30th this year. And then, we give the market enough time to absorb the changes that we announced first on May 24th. And then we go through a query period, a couple of weeks where, we take any feedback and, maybe some corrections are made during this period. And then after the 2-week query period, the membership is locked down. And so, at this point, the reconstitution changes, we are, moving forward with them toward next Friday's close, June 28th.
So that's why, listeners, if you're seeing a lot of headlines this week about NVIDIA taking the throne of the most valuable company, this is obviously as of earlier this year. When we ran these numbers, of course, it was Microsoft and Apple battling for dominance. Apple had the top spot from 2021 to 2023. Now, Microsoft retaking it, of course. If you rack these numbers today, probably would be a little bit different. Lots going on in Apple land, too. In fact, Apple was actually kind of unched down on the year in terms of market cap. One of the few names in the Magnificent Seven to actually do that. All the rest were rocketing to new highs seemingly daily out there. But Microsoft retaking it. Of course, the stock buyback has been announced since then. We've seen Apple roaring back to life as well. So it would certainly be fascinating to rerun that right now. But obviously, technology and growth are the name of the game out here yet again this year, Catherine. So walk our listeners through that a little bit, some of the interesting trends and developments you saw as tech just continued to maintain its stranglehold on everything out there.
Yeah, correct. And I also clarify on that point you made about, the changes after the rank day, after the announcement, and NVIDIA continuing to grow. I mean, yeah, if you look at the weights that we have indicative weight files for our clients to be able to plan for the reconstitution trade. And yeah, I just checked it as of yesterday. Obviously, today might be a different story, but NVIDIA had overtaken Apple, Microsoft was still above. And remember that the index weighting is based on float adjusted market cap weight. So any shares that are unavailable to investors are taken out. So when the index is constructed, then all of the shares, it's reflective of what's available in the marketplace. And then going back to your point about the technology, yes, we've seen a growth, continuing increase technology as a weight in the Russell 1000 index, especially the Russell 1000 Growth Index. We've seen super micro computer, MicroStrategy, big tech names in the Russell 2000 graduating up into the Russell 1000 with this reconstitution. Just a couple of names that are moving into the Russell 1000 from the small cap space. And then the small cap side is being replenished by healthcare companies that are newly eligible for the Russell 2000. So, with some of these tech companies moving out, but you're seeing a lot of the numbers of companies joining the Russell 2000 are coming from healthcare.
People might be surprised to see, you're right, the tech weight in the Russell 2000 decreasing. That's because they're graduating, listeners. They're exploding in market cap, so they're graduating to the Russell 1000 out there, including some names as Catherine just noted, Supermicro jumping from the Russell 2000 up to the Russell 1000. Just a massive move year over year out there for this name. Is that the biggest one you've seen, Catherine, since you've been crunching these numbers? The jump that Supermicro made from last year to this year?
Yeah, Supermicro is the biggest name moving from the Russell 2000 to the Russell 1000. Correct.
A lot to unpack here, listeners, including total market cap. You might be wondering how much that has changed. Obviously, it's higher. How much higher is it, listeners? Well, total market cap jumped from 10.9 trillion, already just an enormous number, to 15.4 trillion this year. So an enormous move. A couple other interesting nuggets here. As of this year's recon, 6 companies were above 1 trillion in size. 4 of them topping the 2 trillion mark. We all know NVIDIA getting around the 3 trillion level now, which is, again, just a terrifying notion. You know, Catherine, it seems like not that long ago, we were all celebrating the first ever $1 trillion market cap company. And now we have 4 companies above 2 trillion and 1 threatening 3 trillion. Doesn't seem like we've just expanded very rapidly in that direction, Catherine?
Yeah, I think that it's been interesting. It's just a couple of years ago, as you point out, that, we saw the first $1 trillion company. And then I think last year, two companies, I believe it was Microsoft and Apple, that crossed $2 trillion. So as you know, there are 4 companies this year above $1 trillion as of the rank date. And then six companies above $1 trillion this year as of the rank date, with 4 above 2 trillion. So yes, it seems like the top just keeps getting bigger. Now that's also brought on some inquiries from our clients about, do we have capped indexes available? So we have launched some capped indexes that, reduce the amount of the biggest companies in the index. But not everybody wants this, obviously. The clients look to FTSE Russell as an index provider, the benchmark provider. So they want to see the market represented and reflected in the benchmark. So the standard indexes of Russell 1000, Russell 1000 Growth remain uncapped. They're reflecting the float adjusted market cap that's available for these companies, despite their size, their growth in size. But now we're also offering these capped indexes for clients who need them. And also something interesting I might know, we've also launched an X top 10 index, the Russell 1000, excluding the top 10 companies, our constitution. So that gives an interesting indication, because the derivative of that was that we had to launch the Russell top 10 index. So you can see the difference the top 10 companies are driving over the last several years compared to the Russell 1000, excluding the top 10 names. So it's been an interesting dynamic in the markets occurring. And, we're constantly talking to clients on how we can provide better index solutions to help them understand what's happening.
You're right. That discussion, that talking point, we've been saying it for a while. We've been throwing around this term Magnificent Seven for a while and joking about how this handful of names seem to be driving the market. But that conversation is getting a little bit more heated these days, it seems like, as that breadth of the market is really continuing to narrow. We're seeing many days recently, even this in the last week, where the vast majority of the S&P and major indices are selling off, and a handful of big names, pretty much the ones we're talking about here, are up, and that is lifting or keeping the markets at the very least flat. So it does seem like this conversation is heating up again in earnest, Catherine. This notion of really it's a tale of two markets. It's a Magnificent Seven, or even you could take a couple out, maybe a Magnificent Five, even just NVIDIA's market and everything else. Some people are starting to get a little bit concerned by this, thinking this is not a sustainable trend for the long term, that we can just strap the entire market on the back of 4 or 5 names and pretend everything else is hunky-dory. You've obviously been crunching these numbers for a while. You've been watching the market breadth and the changes therein for a while. What are your thoughts on what we're seeing right now, and does it cause any alarm to you that it really is concentrated in such a small number of mega names?
Well, I think it just goes back to we're reflecting what the markets are doing. That being said, I mean, our research team has taken a look at history, right? We've seen concentration, maybe not to the magnitude we're seeing today, but we've seen concentration happening. If you look back at the tech bubble, the financial crisis, right, leading up to the financial crisis. So we've seen this concentration happening, and those who might be fearing a mean reversion, those are the people who might be concerned and starting to look at, okay, maybe I need to diversify my holdings. That's why the Russell 2000 as a small cap benchmark, I think, has been attracting more interest lately, as well as the value side of the equation. So, like I said, all of these Magnificent Seven companies are 100% growth. So some clients are starting to look to maybe value strategies to diversify in the event that maybe there is a mean reversion event. Obviously, nobody will know until after the fact.
That is the case. And since we're talking small caps, listeners, let's do a little dive here really quickly into the world of FTSE Russell options over here at CME. Head on over cmegroup.com/TWIFO, listeners. Then go into the equity indexes drop down, then slide over a couple of slots to Russell 2000. I said at the top of the show, it's probably going to be a lighter volume week. That does not appear to be the case for the Russell 2000. Apparently, everyone forgot to tell them that it was a holiday yesterday, because already 50,000 contracts on the tape, which is about a week's worth of volume in a normal week. So interesting stuff. Also, obviously, fairly strong compared to when we used to talk about this regularly on the show, and it would average somewhere between 10, 15, 20,000 contracts was a lot of paper. So 50,000 on a truncated holiday trading week, nothing to sneeze at, listeners. 21% of that paper is going up in the September contract. It has about 92 days to go. It's another reason why we like FTSE Russell. It's not all near dated, even though if you look at the front dated contracts, 36% of it going up in the June contract has about 1 day to go. And like we said, about 20% in the September contract here. In terms of volatility right now, by the way, small caps right now at about a 2024 as of the start of this segment, up about a little over 16 handles on the week, about 0.8%. And what is the volatility out here in small caps? Well, if you get a little bit farther beyond 1 day, obviously, listeners, let's go out, dare we say it, a week. 16 and a quarter, off about 1.2 points. In terms of skew, we've been saying it for a while. Puts are usually bid in equity indexes, but they've been not quite as bid as they have been in the past out here. So if you're looking for protection, this wasn't the worst time. Seems like some people got that message because the puts getting a little bit juicier this week. They were 4% bid last week, which again is fairly light. This week, 8.3% bid. So puts catching a bid. The calls 1.7% cheap. This week, 5.5% cheap. So intriguing developments across the board. And if you're wondering what was the big dog out here, what was driving a lot of the volume out here in all things small caps at CME, it was the 2070 vertical that goes away in about a day. Trading quite a bit this week, trading 3,200 times on Monday, mostly opening there, and then about 1,900, almost 2,000 times yesterday. Closing there. So it's like they put it on Monday, took off most of it yesterday. There's still, though, about almost 2,000 open on the 2070s and about 3,200 open of the 20 halves. So these are substantially out of the money calls, listeners, with about less than a day to go now. So they'll probably need to get the heck out of Dodge on the rest of them, or maybe just let them roll into oblivion. But either way, some size verticals going up this week and taking a fair amount of volume with them out here. So yeah, apparently no rest for the wicked out here when it comes to small caps this week. A lot of paper on the tape out here. Catherine, I appreciate you giving us a little bit of an insight into all things recon. Before we go, if there's any other intriguing data points you want to hit on, maybe some interesting takeaways you think people should have from this year's recon, have at it. The floor is yours.
Thank you. I think it's really there are glimmers of hope in terms of more companies listing, right? So IPOs, the number of IPOs being added to the Russell 1000 is 3 at the Recon, and 12 IPOs are being added to the Russell 2000. Now, this is down lower since the highs that we saw in 2021 when a lot of listings came to the market. It dropped down a little bit, but now we're seeing a slight uptick and hopefully continuing uptick. I mean, it's important for some of the biggest companies that we're talking about today were first initially members of the Russell 2000, like NVIDIA, Amazon.com, Netflix. So, those are companies that started out in the Russell 2000, then graduated, and now they're in the top 10 names. So really interesting times, but that's really why we do this process, reconstitute the indexes annually and add IPOs quarterly so that, we're capturing these new entrants to the market and capturing the changes that are occurring in this dynamic market.
And Catherine, if folks want more info on all things recon, where should they go? What should they do?
So we have a website. They have changed our our website link from a more simple one. It's now lseg.com and then /FTSE-Russell. And then there's a lot of Russell reconstitution related materials, information on IPO additions, the history of the 40 years over the evolution of the Russell indexes over the last 40 years. So lots of interesting stuff, and definitely check out our website. And you're always welcome to reach out to FTSE Russell if you have additional questions and want to talk further.
There you go. Check them out. So you can also give them a follow on Twitter, of course, at FTSE Russell. All one word there, the place to go. A lot of great data coming out there in between our annual appearances here on the show. Catherine, good talking to you. I look forward to our chat this time next year.
Thank you.
All right, listeners, now it's time for us to keep on rolling. It is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everyone, welcome to the Movers and Shakers Report, the portion of the show where we do just that. We break down everything lighting it up to the light side and to the dark side over there at CME Group. And it's an interesting week, listeners. Biased towards the green, but not heavily. Looks like it's roughly 60-40 green over red this week. And percentage movers, we are pretty much even, both of them coming in right around the 7% level to the light side and to the dark side. Well, let's go light side first, just because I know I'm known for going dark side whenever I have the chance, listeners. Number 5, we're kicking it off in the metals. Palladium up 3.03% this week. It was number 5 in the other direction last week, off 5.03%. So an interesting couple of weeks out here for Palladium, listeners. Number 4, we're going to the energy. It's RBOB, up 3.07%. Number 3, we're keeping it in the energy with WTI, up 3.85%. Number 2, back to the metals. It's platinum, up 4.22%. It was number 2 to the dark side last week, off about 5.5%. And then the number 1 light side mover, keeping it in the shiny stuff, it's silver. Uncle Mike's favorite, making a triumphant return after giving up 7.4% last week, getting back about 7% this week. So getting most of it back this week. So a rock'em sock'em couple of weeks out here for silver as well. Now to the dark side we go. Number 5, kicking it off in energy. It's our old pal Nat Gas, taking a hiatus this week, off 5.88%. It was number 1 to the light side last week, up nearly 7%, 6.98%. So giving back almost everything that it gained last week. Number 4, back to the ags. It's oats, off 5.92%. Number 3, keeping it in the ags, but switching to dairy. It's class 3 milk, off 5.93%. It was number 5 in the other direction last week, up 5.12%. Number 2, KC Wheat. So it's an Ags Palooza, listeners, off 7.45%. And the number 1 dark side mover this week, Chicago wheat off 7.72%. Like I said, both the light side and dark side number ones hanging out right around 7%. But now it's time to see what's moving and shaking on the volatility front, listeners. Fire up CVOL. Just type CME and CVOL into your browser of choice. You'll see this report there, listeners. You'll see the dashboard, really. And then once you're there, click the high-low range for 1 week, go to the aggregates product tab, and then select an ordered list. You can see it in a nice order there, and bam, you can follow along with our CVOL movers and shakers report as well. If you did that, listeners, you would see we've kicking it off this week. We have energy at the top of our list, 47.05. It is not the highest CVOL on the board, though. That would belong to the Treasury yield vol, which is a much more volatile beast than anything else here. But energy, listeners, the energy CVOL this week, 47.05, up 0.69 today. So that's why it's leading our list today. But on the week, it is hanging out towards the lower end of its range. 46.36 was the low, 50.73 was the high. And then right below it, we have the ag products CVOL, listeners, coming in at a 24.5, up 0.48 today. On the week, also hanging out. Actually, this one, listeners, the ag products were hanging out at the upper end of their range. Pretty much 24.5 is where they pinned the needle this week, and that's where they're hanging out right now. The low was 23.82, so not a huge vol week, but a pretty strong vol day, gaining half a point out there for the ag products. Next, we have the commodity CVOL, listeners, 32.77, up 0.38 today. On the week, hanging out towards the lower end of its range. The low came 32.39. The high, 34.31 this week. So commodity CVOL near the lower end of its range. Then below that, we have the FX CVOL, 7.51. It had some moves recently, not today, off 0.02 today. So it's unched today. On the week, it's gone from a low of 7.16 to the high of 7.63. So that's actually a decent range for FX, coming in right now 7.5. And then below that, we have the Treasury price volatility, a 6.37. Obviously, that's very low. Off 0.21 today. The range for the week, 6.08 to the dark side and 6.81 to the upper end there, hanging out in the lower third of that range right now. Then below that, we have the metals, 18.01 off 0.29 today, also hanging out at their low level for the week. The high was 18.67. And then at the bottom of our list, even though it is the highest total number, we're talking the Treasury yield volatility, 112.27 off 3.14 points just today. On the week, also an impressive range, 105.93 was the low, 119.23 was the high. So once again, an impressive range for the Treasury yield volatility, even if it is coming in at the bottom of our list. All right, a lot to unpack, listeners. We have a lot of names lighting it up. We have a lot of metals. We have a lot of ags. We've talked a lot of metals lately. We also have a couple of hot ones. Light side, it seems mostly a battle between metals and our old pal, energy. So let's head out there first.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, welcome to the wonderful world of energy. Take a bit of a departure this week, not talking about our old friend nat gas. It's usually a stalwart on the show. It is coming in at number 5 to the dark side this week, off 5.88%. But you know what? We've been talking for a while, nat gas having this volume explosion. Not feeling the love this week on the volume front. Now, obviously, it is a truncated holiday week, so bear that in mind. But lately, we've been seeing nat gas well north of 1 million contracts, 1.1 million contracts some days. So far this week, only 452,000 contracts. Now, I say only in quotes because there's a lot of other products that would kill to have that kind of volume. But seeing nat gas cut more than in half this week, that's obviously not just your usual holiday truncation. There's a lot more going on out there. So take a bit of a hiatus from nat gas this week. But we will talk about a name moving into our movers and shakers this week that we haven't had a chance to talk about in a while. But this is our old pal WTI, coming in 81.38 when we kicked off the show here. It's up 3 1/3 handles just since Monday, or 4 1/4%. You go back to the end of the show. Last week, it's up 3.85%. So feeling a little frothy out there again, back in an 80 handle. Folks out there for summer driving season won't like that. But that's what we're seeing out here, listeners. And again, we said 325,000 contracts, so we usually expect WTI be around somewhere between 400 and 450. So that's about the amount of volume we would expect for a truncated holiday week. So not really giving up a lot out here in WTI this week. And unlike our equity pals, which pretty much only seem to trade 0-day contracts, we're going out 27 days to the August contract here for WTI this week. That's where 44% of the volume went up this week, listeners. You might be saying, what is the volatility out in WTI these days? The answer is a 21.07. That's off 1.17 points on the week. So vol coming in out here this week. In terms of skew, we are biased towards the puts. Last week, puts 5.7% bid. That has remained. We're 5.8% bid this week. The calls last week, 2.7% cheap. Getting cheaper this week, 4.7% cheap. So all the love is for the puts. Nobody wants the calls out here. And in terms of action, maybe we can see what was going on, because it was the 82 calls out here, listeners, in August that were leading the dance with 9,300 contracts this week. So pretty beefy week for them. Looks like they put up 2,400 contracts on Monday, mostly opening. Then somebody took off 4,200 on Tuesday. And then today, obviously, the Wednesday holiday kind of throw me for a loop this week, listeners. I'm used to saying Monday holiday, Wednesday, not so much. Throwing off my game this week, but today we're seeing 2,600 contracts on the tape against an OI of 8,200. So why folks were bailing on Tuesday heading into it? Interesting. Obviously, we're not quite at that strike right now, but maybe we were threatening it more on Tuesday, which is, again, if you're long some calls, taking some off when you're blowing through or threatening your strike makes some sense. If you're short them, you could also see some of that as well. Now, this skew action we've been seeing out here, calls getting cheaper, might indicate some folks overriding the heck out of these. Let's also look right below it. We have the 81s, also very active this week. Looks like there might have been some vertical action on Tuesday, about 4,600 going up with the 81s on Tuesday, closing there as well. So it's not a roll. Looks like folks just maybe had a bit of a stupid on the 81, 82, taking it off about 4,200 times on the 82s, 4,600 times on the 81s. Either way, closing paper on both of those on Tuesday. Only 1,100 on Monday, so it doesn't really line up as well with the 82s on Monday. And the 1,700 today against a remaining OI of 5,800. So some interesting paper afoot out here. Looks like, again, closing vertical or just closing stupid action out here. And would you have a 1-point vertical? We've seen crazier things out here. So 1-point vertical in WTI, does that excite you? Would you be taking that off on Tuesday? Either way, someone took off size on both of those. The fact that the skew came in quite a bit does maybe lean towards the fact that somebody maybe had a stupid on and they were just dumping both of them. Either way, listeners, we got calls coming in, and we got the 81 and 82 calls leading the dance out here in WTI this week. Also worth noting, there were some puts actually sneaking in between the 81 and 82s volume-wise. 8,270 of the 62 half puts also in August. That's an intriguing strike. 62 half. And almost all of that volume, I said 8,270, almost all of that is today. 8,007 today against an OI of 858. So clearly size opening paper on the 62 half puts. Worth noting, 4,600 of the 78 puts are also trading today, also in August. So lines up close to a 1x2, so there could be some of that. That would also explain that pretty far out of the money strike, 62 half. That's not exactly the most relevant of strikes, so that could make some sense. Maybe someone buying the 78, 62 half 1x2. 78 puts, obviously a lot closer to the fire, listeners. Those are only a little over 3 points out of the money. And then against that, you'll pick up some WTI south of 62 half. Do that on a ratio. I could certainly see an argument for that. I'll have to look up the prices to see what they got that in for. It's going to be a debit probably, because the 78 put is very, very beefy. The 62 half put, not so much. How much they got for that 62 half put will impact my thought process on whether I like that one or not. But from a pure strike selection, it makes a certain amount of sense. You don't see the 1x2 used that way as often anymore, and it's a good use case if you want to maybe catch a little bit of that fallen knife on the way down, and then also maybe you're not afraid to pick up some of the underlying at the lower end of that range, but maybe you don't want to outright just sell a put. You want a little bit of a cushion first. The 1x2 put spread, not the worst way to go about it. Also worth noting, 2,800 of the 76 puts going up today. That doesn't really line up as well with the others out there. So looks like it could be a 78.62 half, but we'll have to dig in a little bit more to find out here, listeners. So that's what we have cooking this week in WTI. Let's look really quickly to see any other interesting and or aberrant prints. The par calls trading a pretty hefty amount in December, listeners, going up nearly 6,000 times this week, 5,800 times to be precise. All of that yesterday, 5,600, actually Tuesday, 5,677, only left a couple hundred the rest of the week. So 5,800 contracts against an OI of 21,000. So worth noting, 5,000 of the 110 calls traded the same day. Those were closing, so maybe somebody rolling down from the 110s down to the pars. I can maybe see an argument for that, listeners. As we keep on rolling, let's see what else was lighting up our movers and shakers this week. We have a lot of metals. We have been hitting metals quite a bit of late, in particular silver. We haven't done as much ags, though, and they are dominating our dark side this week. In particular, our old friend, Chicago wheat.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, listeners, it's time to get our hands dirty on the old ag side. Go to that drop down, go all the way to the top of the asset class list. It is an alpha order list after all, listeners. And then from there in ags, you're going to go in product family to grains and oil seeds. Then down one slot to Chicago wheat, aka SRW wheat, off 7.72% this week. So a rough week for Chicago wheat. How much paper on the tape this week? You know, it is a truncated holiday week, so you'd be forgiven for expecting a lot less paper, but 192,000 contracts. That is nothing to sneeze at out here in Chicago wheat here, listeners. Where is Chicago wheat trading right now? That front future that goes away in a day is trading at a 570 and a half. Off 42 and a quarter handles just since Monday. So a rough run here, nearly 7% just since Monday. So obviously a lot of this sell off, the lion's share coming this week here in Chicago wheat, listeners. A rough go here for a near dated contract in Chicago wheat. Again, 192,000 contracts, 46.5% of them going up in that contract that goes out tomorrow. I think you can understand that. 7% move intra-week. You want some near-dated paper on in that case. So we'll hang out there for the volume. I think volatility-wise, though, I think we'll look a little bit farther out. Let's go out, I don't know. How about 15 days? That'll get us to the week 1 July contract. 33.5, that is the vol out there. Up 2 2/3 points this week, so looking a little bit juicier. By the way, that future is at a 584.5. So once you get beyond today, that future ticks up a wee bit. In terms of skew, we have going out a couple of weeks, we have all the interest to the calls. The calls are 10.2% bid this week. Last week, 6.7% bid. The puts last week, 4.1% cheap. This week, 7.7% cheap. So the puts getting cheaper, calls getting juicier. Intriguing in a aggressive sell-off week. Now, there could be some skew rotation baked in there, listeners. As you move down the skew curve, you expect to see the puts come in and the calls get bid, but it doesn't always happen when we have these aggressive moves like we have right now. So interesting data. And in terms of what's leading the dance, it's actually a pretty close tie between the par calls, the 600 calls going out tomorrow. They did about 7,050 contracts this week, and the par calls going out in September. These have 155 days to go, and they did almost 7,200 contracts this week. So I guess we have to head out there, listeners, but it's a neck and neck race out here. Maybe there is some rolling action going on out here too. That could be driving the very similar levels of paper. If you're wondering, that future out there, again, 584.5, the vol out there about 30 3/4 in September, coming in about 1.125 this week. And the calls out there are 12.6% bid. And they were 14.4% bid last week. So the calls actually coming in a little bit farther out on the old term structure. Let's go out to the pars in September, listeners. 7,181 to be precise, going up this week. 3,500 on Monday, 31, almost 3,200 on Tuesday. Only about 500 today. So all that paper going up this week. All opening earlier this week as well. So a lot of opening paper here on the 700s. Let's just look really quickly. I want to go dig into the 600s going out tomorrow because those also are neck and neck, and they're pretty much a very close number two. No, they were opening this week as well. That's interesting because you would maybe expect to see some rolling paper when they line up that closely, close to 7,100 each for both of them. But no, opening paper on the pars pretty much all week as well. 2,700 on Monday, 1,200 on Tuesday, 3,000 today against an OI of 4,800. So they could be taking some of those bad boys off today. I mean, 600 calls, 570. Chicago wheat has pretty much given up the ghost over most of this week. Are you still holding on for dear life to the par calls? Maybe. But it would be an intriguing bit of hopium that you are ingesting out there if that was the case. Yeah, 600's going up 7,100 times this week pretty much. 590's right behind it, 6,740 also opening all week long. 1,500 on Monday, 1,200 on Tuesday, and nearly 4,000 today. Opening today against an OI of 2,200. That's interesting as well. Again, only a day to go on these. We're quite a substantial away from the 590, 20 handles. And they're opening for size out there. So, I mean, I know we've been rocking and rolling out there, but size opening on the 590s today, that's surprising. Again, the paper here all over the place, which is kind of what makes it fun. It's a little bit of near-dated for all you near-dated folks out there. And then what we've come to expect from the Ags, a little bit longer-term paper. Worth noting, if there was rolling afoot, if they were closing the 600s and rolling to the 700s, they ain't doing it today because only 464 of the 700s have traded out here in September today. So they took off nearly 4,000, 3,000 to 4,000 if they were closing of the 600s. They didn't reestablish today, so doesn't appear to be a rolling trade. Just appears to be oddly similar paper, which does happen from time to time out here, listeners. All right, we're coming up against it. We could maybe squeeze in one more just because I like you folks out here. Not much really lighting it up. We can talk about in Class 3 milk. Oats, we know the deal there. Nat gas, we already talked about. We already did wheat, so we hit a lot of the big ags this week. Tell you what, we'll get out of here just because I'm a nice guy. And Uncle Mike's favorite product, we'll get out of here a little bit of silver.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, listeners, to the shiny stuff we go. Listeners, go into that drop down, go pretty much all the way to the bottom of the list. That's going to get you to the metals. Then we're going to go on the shiny stuff, go past gold, right to silver. Hanging out right now, 30 3/4, up about $1.28 or about 4.35%. Just this week, of course, you go back to the end of our show last week, up a little over 7%. So an impressive resurgence. We were just talking recently. It seemed like maybe Uncle Mike's favorite Philly was running out of steam and then getting it all back this week. So maybe some of this broader economic turmoil, what we were talking about with Catherine earlier, a lot of folks getting spooked by this lack of breadth in the broad equity market. A lot of that maybe being felt here in the rates, obviously, in the metals. Obviously, the rates, also some action out there on the yield front. So maybe some of that driving some of this paper out here. Either way, a decent amount of paper here on the old silver machine. 55,000 contracts, almost 56,000 this week. So you would never know by looking at this that this was a shortened holiday week. You think this was just a regular week. So actually outperforming this week, which is kind of interesting. Of that, 28.7% going up in the contract that goes away in about 5 days. So we'll hang out there really quickly. The vol out there, 31.5, kind of unched on the week. If you go a little bit farther out, listeners, you go out, let's go all the way out, dare we say it, a month. That vol's at about a 32 3/4, up about 3/4 of a point. So they're not that dissimilar from a vol perspective, about a point and change difference between the weekly contract here and the 1 month contract. In terms of skew, you know it's bid to the calls. The question is how much. Last week, the calls were 8.4%. Bid this week, 5.8%. So coming in, and the puts 5.9% cheap last week. This week, 3.1% cheap. Again, some of that skew rotation as we rally probably kicking in. Also, folks, taking off some of their upside as we blow through strikes. Makes a certain amount of sense. The big dog out here this week, though, listeners, did not come in the near-dated contracts at all. No, it came longer term all the way out, not to October, November of December of this year, not even January or February of next year, listeners. They're going all the way out to March, to the March 45s. Again, I did not have that on my bingo card. That's why we have to crunch the numbers. That's why you have to tune into TWIFO every week, listeners. March 45s. That future, listeners, is at a 32.11, if you are wondering. The vol out here in March is a 29 and about a half, up about half a point. So a decent little vol discount. You go a little bit longer term. That's kind of interesting. Skew-wise, it's all upside. The calls last week, 12.8% bid. This week, 14.7% bid in March. The puts, 6.5% cheap last week. This week, 8.3% cheap. So interesting skew out here. But what are folks up to out here? What are they slinging on the March 45s? Looks like all of this action came on Tuesday. Someone closed 2,761 of the March 45s and also 2,760 of the March 50s. So clearly there was a March 45-50 vertical. And they said, you know what? We're getting the hell out of Dodge on this thing. Maybe they got a little bit spooked during the recent sell-off and this recent rally back up to pretty much where we were a couple of weeks ago. That was enough for them. Maybe they got back what they lost. Again, this is March of next year, so not a ton of delta on this, and it's pretty sizably out of the money. So it's a low delta spread, but for whatever reason, they decided to get the heck out of Dodge. And that's why March leading the dance. Also worth noting, it traded another 733 times today, this vertical. So there's clearly some left because there's 3,100 of the 45 still open and 3,500 of the 50s. So maybe they just took some off because they just couldn't handle the heat anymore, listeners. Speaking of heat, that is going to do it for us here on the show this week. No more heat for us on TWIFO this week, but don't worry. We're not done, not by a long shot. Back again tomorrow, noon Central, 1 p.m. Eastern. Going to talk all things vol. Yeah, there's some heat out there, listeners. An intriguing time out here in these markets, to be precise. Of course, I want to thank our friend, Ms. Catherine Yoshimoto. Check out what they have cooking. Give them a follow over there at FTSE Russell on the old Twitters, listeners, if you are intrigued about everything we're talking about here on today and much more. Of course, head on over to cmegroup.com/TWIFO for all the latest on the futures options front. Type CME and CVOL into your browser if you want to dance a little bit with all things CVOL. Again, speaking of volatility, back again tomorrow, noon Central, 1 p.m. Eastern for volatility news. After that, exclusively for our pro folks, we're back one final time for the week for Options Oddities. Make sure you check that out, theoptionsinsider.com/pro to learn more. Then back again next week for another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.